Today, we are hosting a pretty unique and exciting event where subject matter experts are going to roast Zero Circle, and that's why we call it a roast session. You may be wondering why Zero Circle wants to go through that roasting process. It is because we truly believe in receiving brutal feedback, learning from it, improving, and growing. Zero Circle is one of the portfolio startups that we onboarded in the July 2023 cohort. They offer a marketplace and assessment tool for sustainable financing for SMEs. This is Pankaj Gupta from EthAum Venture Partners. We are a deep tech revenue scaler and fund based out of Singapore with approximately 100 portfolio startups from different parts of the world, sectors, and stages. And today, I'm really excited to hear feedback and insights from the experts on Zero Circle. Without further delay, I would request Hemant to do a brief introduction of himself, and then I would request our jury members to introduce themselves. Hemant?
Thank you, Pankaj. It's a pleasure to meet you all. I'm looking forward to the session today. My name is Hemant Seri. I've been in the technology and product world for about 25 years. Worked in a number of startups early in my career. Worked in consulting roles in a number of big banks. The middle of my career and the last 8 years or so, I was working at Dun& Bradstreet in their risk and compliance organization. I was the chief product officer for that organization. We had a number of clients focused on solutions like supply chain risk, compliance, KYC, third-party risk, and onboarding. And one of the last few things I did there was essentially building ESG risk solutions into third-party risk programs that we manage for our customers. Zero Circle was started with that foundation as a thesis, where there is a better way to engage with small and mid-sized businesses around sustainability by providing the right incentives and providing the right capabilities to make it simpler for them. As we all know, sustainability is a very complex space. And as simple as we can make that process for many of these organizations, the better engagement we can get. But we also need to provide the right incentives. So that was the foundation thesis of how we started Zero Circle. And now we are in the thick of it. We've been in business for about a year and a half, and with some of the feedback here and with some of the traction we're getting, we seem to think that we have kind of achieved a decent product market fit that we now are looking to scale and grow from here. I look forward to all the feedback after the pitch, but looking forward to meeting you all during the session.
Thanks a lot, Hemant. May I request Adam to do a brief intro, please?
Yeah, sure. So pleasure to be here. Thank you for the invite. My name is Adam Thompson. I'm the Global Sustainable Finance and ESG Leader for IBM Consulting. Been in the business for the last 17 years, worked in some 50-odd different countries, but apart from talking the talk, I like to think I walk the walk. So I'm also an EU Climate Pact Ambassador for Germany, sitting in DG Climate in the EU Commission, as well as also supporting the Task Force for Nature financial-related disclosures as part of the Data Catalyst, as well as the adoption program.
Happy to pass. Thanks a lot, Adam. Really appreciate your time today. Ashish, you want to go next?
Yeah, good evening from me, and I'm not sure where everybody is. So yeah, good morning, good evening, wherever you are. I am Ashish Gokhale. I am dialing from Dubai. So I work in National Bank of Fujairah, which is a UAE-based bank. I am not a sustainability expert, to be honest. I have moved into this role a couple of years back. I come from the corporate and transaction banking background, mainly from trade finance and lending. So that is why actually, and for the last 2 years, I have been working on the ESG strategy and the sustainable finance product development for the bank. So yeah, excited because it's amalgamation of my previous roles and my current role. So yeah, excited to be here. Thank you.
Thanks a lot, Ashish. Ozde, may I request you to do an intro, please?
Of course, thank you again for the opportunity. This is Ozde Demirturk, coming from a project finance background, more than 10 years that I'm in this world, and working closely with the DFIs and IFIs, which means that focusing on the sustainable perspective and also the ESG side of the investments. So happy to be here working currently with a Turkish manufacturer, Sanko, that we are investing in sustainable technologies and industry. So thank you for the opportunity.
Awesome. Thanks a lot, Ozde. Paul?
Yeah, me, Paul.
Okay, thanks. Technology has always been my tough spot, so I appreciate the opportunity. My name's Paul Ellis. I'm currently the host of the Sustainable Finance podcast, which has been up and running for over 5 years, and excited to be here because I have a more traditional background in long-term investment in sustainable finance, and hopefully I can bring some ideas, as Ashish hopes to do so, to the table that will be beneficial for Hemant and his firm going forward.
Fantastic. Thanks a lot, Paul. Tung.
Good evening, everyone. It's evening from my end as well. So my name is Tung Anh. I'm from the Fin Ratings, which is the one of the three domestic credit rating agency in Vietnam. And yeah, of course, I'm based in the Hanoi, Vietnam, where we have also had the opportunity to join the embarking the green finance journeys, as we are the only one in the country to be authorized by the Climate Bonds Initiative to be the verifier of the climate bonds, green bonds, and green loans, etc. Looking at this event, I'm very excited as we are at Fin Groups, which is the parent company of Fin Ratings. We share a lot of ideas and way of business, like zero circle, and it looks like that it is very interesting to see the presentations of Hemant, and hopefully that we have the very insightful discussion today. Thank you.
Fantastic. Thanks a lot, sir. Okay, Hemant, are you ready with the presentation?
Yes. Yep.
Please go ahead.
Let me share my screen. Okay. Everyone can see my screen?
Yeah, please go ahead.
Okay, cool. It's a pleasure to meet everyone. Thank you for all the introductions. So we'll just kind of kick off the thing. So what is Zero Circle? We are a climate fintech startup on a mission to unlock sustainable finance within the small and mid-sized segment. Today, the challenge is there's close to $60 trillion of assets under management that are sitting in large financial institutions and various pension funds and community banks that essentially over the next 10, 20, 30 years have to be transitioned to some form of sustainable linked investments. And on the other side, there's about 80 plus million small, medium businesses that are looking for capital, that are being forced to do net zero transition, that are being, that have to grow in various businesses, and they don't have access to capital that essentially can lead to transformation and becoming a net zero player, right? The challenge today is that there are these types of investments that sit in large banks and in responsible finance groups within banks like JP Morgan, HSBC, etc. But they deal with very large investment dollars. They the minimum loan size for some of these banks that I've spoken to are like $50 to $100 million. And on the flip side, there are actually many small microfinancing institutions that do loans and programs for developing countries and farmers where they want to become to transition them to more sustainable operations. And that also exists, there's multiple companies that you can talk to around that today. But there's a huge gap in the middle. And this gap is pretty much, any mid-sized business, which is a big swath of the population of businesses, don't have access to the right kind of capabilities and capital that tie them to kind of net zero transition and tie them to green financing. And the reason for that is, the process today is very complex. It's a complex process. It's expensive. There's no, uniform standards. And the complexity also lies in the fact that the knowledge is the landscape is changing so rapidly that banks and institutions don't have a way to kind of continuously track this on a periodic basis, right? In addition to that, there's for all of us to kind of collectively meet our net zero goals, McKinsey states that over the next 30 years, $3.5 trillion of new investment and capital is going to be required for the collective ecosystem to essentially meet our net zero, 2050 net zero goals. That's a lot of, kind of investment being pumped into the ecosystem. And there's no efficient way to deploy that capital in a meaningful way. And today, if you see the fund market, only 4% of the funds are tied to actual sustainable funds, right? In addition to that, where all the activity has to happen for net zero transition sits in the supply chains, right? 75, 80%, whichever industry you talk to, a significant portion of those transition has to happen in the supply chains. But how are they being incentivized and supported to enable that transition is still a huge open gap. This is where Zero Circle can come in. So what we are looking to do is bridge that gap. We're looking to connect financial institutions with these mid-sized businesses by doing three different things. We're looking to qualify these businesses for financing based on policies and procedures identified by various financial institutions, specifically focused on the green financing criteria. We want to align these businesses with the financial institution as part of what type of program and incentive and industry they're actually looking for financing for. And then more importantly, once the loan has been issued by the institution, we're looking to work with the business to kind of constantly monitor and track progress over time, especially to meet some of the covenants of the loan, where there are usually KPIs and metrics that you have to achieve around energy reduction or waste management practices, etc. And we want to be able to track or support them in tracking those metrics over time. We do this by essentially creating a marketplace for both the financial institution and the small business. The idea is that we would initially work with the institution and essentially identify the factors and the investment criteria that they're looking for to fund these various programs. And then we kind of outreach to a number of small businesses that are in the market segment based on the financial institution. And we will work with them to review their eligibility and pre-qualify them based on third-party data as well as our own AI assessments that we've been able to build to qualify them for the various programs accordingly. Once we connect the institution and the business, they will take over, they will do the underwriting process, and then they will kind of come back to us after the loan has been issued, where we will now work with the business to track progress over time and manage an ongoing sustainability program for the business, right? In a sense, we are trying to create the lending tree for green finance. Lending tree might be a US company. I'm not sure if everybody's heard of it, but they're a marketplace for essentially for consumers to get access to loans and mortgages for their houses. So we're trying to do a similar kind of model for green finance, but more importantly, our long-term objective is to be part of the underwriting process, where banks traditionally have to do your credit check, KYC check, etc. We want to be the green check or sustainability check for the bank as part of their loan issuance. Okay, the way we built this platform is basically we've taken a three-stage approach to this. Every organization has to go through these three-stage life cycle to kind of get qualified for a loan. It starts with a baseline assessment. We built an AI capability to do sustainability reporting very, very quickly for the organization. And now we support SASB, GRI, and SDG today, and we're looking at adding other frameworks over the next 12 to 18 months. Using this baseline assessment, we will now try to qualify them for sustainability assessment based on the type of project and type of initiative they're looking for. Like different initiatives are looking for different data points, right? Whether you're doing biochar projects or green building projects or energy transition projects. So there's various criteria and metrics that are required as part of those assessments. And so we are essentially building out programs around those. And then lastly, we essentially qualify them for the bank's financial criteria. And we created this thing called the Impact Performance Scorecard that allows us to match make the bank with the right organization based on the performance and the metrics identified by the organization. Then using the marketplace, they will essentially connect with the various banking institutions and then the loan can be issued from there. So today, the platform is live for the SMBs on the baseline assessment, and we are in the process of launching the marketplace over the next 3 months. We're already in talks with a number of banks as part of partnerships to align their strategies and bringing the programs to their customers. And then over the next 3 months, we're looking to launch the marketplace by January, February of next year. Our traction has been significant since we started. The interesting thing about this life cycle approach is we can essentially attract customers at all of these different stages before they even get to financing. So right now we're doing a number of baseline assessments, about 30 plus globally, with various small businesses as we are kind of rolling out these self-service simplified assessments for SMBs. Then the next stage, we're talking to a couple of key customers to create these sustainability and carbon assessment programs with them. And then lastly, we're actually doing about $15 million in green loan assessment for an aqua farm and a trucking company right now that is looking for these loan programs. We have a few more in the pipeline that we need to kind of bring in the door. And on the banking institutions, we're talking to about 5 or 10 banks right now in various stages of conversations, and we have a pipeline of over 85 banks that we're looking at. And our targets are really the tier 2 banks. We're not talking to the tier 1 banks. We're looking at second-tier community banks that are looking to, create new products and offerings for their customers and differentiate with the leaders in the space, so to speak. And additionally, I think we will get better traction with these banks where we can incorporate our programs into them, where they require subject matter expertise as well as kind of a capabilities to bring it to market. We have a strong team today. As I kind of mentioned to you about my background early on. Ambi is my partner based in India, and he came from Zoho and has a startup focused on marketing automation and outreach. So, that's going to be a significant driver of how we bring on a lot of customers into our marketplace. And Doug, who's on the call, he's our Chief Revenue Officer. He joined us recently. He has a lot of startup experience. He's launched, successfully exited a couple of key startups in his past life, and he's joined us recently to take us and grow this business significantly from here. I want to do a quick demo before we move on to questions, just to show you what this would look like. So I just wanted to show you kind of a simplified report that essentially gets created from the platform. So the idea is here is, for a bank to qualify a business for this loan, this is a version of the report that we create. Obviously, we'll customize this based on the bank's requirements, and we're getting some new requirements as we're talking to new banks. But the idea is that we'll get a high-level scoring profile. A lot of these scores come from my alma mater and BNB. We get access to a number of their data points, and we can use that as part of a risk identification on the particular business. We will essentially work with the SMB to get their financials and projections based on the project's investment possibilities. Then we've created a simplified KPI model using the green bond principles that some of the big banks use today as part of green bonds and green loans that they issue today. And we're essentially bringing those simplified sustainable KPIs down to the SMB segment. And then in addition to that, we essentially will create our sustainable disclosure policies using our AI model to very, very quickly build out their SASB, GRI, and SDG profiling that they can use as part of the disclosures and summary of what the business is doing to support the green program. All of these things will connect together into this impact performance scorecard. And we have identified 5 different topic areas that we qualify these businesses for. And based on that, the banks can customize this and configure it to what is important for them. Because again, there's a lot of criteria for the bank, and we need to make sure that the bank's criteria are met as part of these this marketplace. And so this scorecard essentially drives the matchmaking between the organization and the bank. And you as a business could get a C- with one bank and an A+ with another bank, just based on what criteria the banks are looking for as part of their investment criteria. Right. So this is the output of the what comes out from the platform. Today, it's a combination of online, manual, and manual outreach with the bank. And what we are looking to do in the next 3 months is make this a much more self-service oriented platform that we can kind of get the customers and businesses to do this themselves as they provide this information and get access to the institutions and the capital they require for net zero transition. Okay. I think that's my time. Thank you. Happy to answer any questions from here. I appreciate any feedback and questions from here. Thank you so much.
Fantastic, Hemant. Questions?
I'll go first, if that's okay with everyone else.
Sure.
Hemant, my immediate concern for you and your company is what's the cost of capital throughout the international banking system? I mean, investors today are loading up on 5% short-term treasury bills, and that's cash. So
exactly.
How are you going to compete especially for this mid-sized market? I get invited to join boards periodically for banks and other organizations, and I can tell you that most board members, even at very large banks, have very little knowledge and experience around sustainability issues. So how are you finding that? Is that fertile ground for you? Are you able to influence a lot of people that way?
Yeah, so it's been interesting, right? So I think the baseline is right. You're right that the cost of capital is high right now. But the interesting thing is the way I'm seeing a couple of different patterns. I'm seeing growth patterns that where I want to differentiate especially community banks. They are being hit significantly hard right now. So how do they grow? They need to differentiate themselves from the top tier banks. And so what they're doing is they're bringing this as a new product category for them to capture new business, right? It might be the same cost of capital, but it is a branding exercise, marketing exercise, and a growth exercise for them to be able to kind of differentiate themselves from their peers and from the industry leaders in this space. That's one pattern I'm seeing. The second pattern I'm seeing is there is a couple of different government-sponsored programs because it's sustainably linked. They can connect it to a couple of different government programs in different industries. So there's things that's happening in the real estate sector, there's things that's happening in the energy sector, and there are government incentives that they will work with the banks to distribute funds that they can now at least get a lower cost of capital for these programs, right? And then the third thing I'm seeing is depending on the industry, and this is something we're seeing in the real estate sector, because you are able to reduce energy by installing new equipment or new kind of heating systems and things like that, you can essentially finance the equipment as part of the reduction in energy costs, right? Because now, let's say you have a $500,000 energy bill, and the equipment is like a 10-year lease on a particular heat pump that they need to install. Now, if I can reduce my energy from $500,000 to 250,000, that 250,000 savings is used to finance the lease. So I'm seeing a lot of interesting things that are happening already in the space, and all we are trying to do is bring more customers into that ecosystem that we can essentially open up that doors and and scale these programs effectively. Right, but you're right on the cost of capital, right? That is not going to go away anytime soon. And so the way we are approaching this is we are tying that step 2 that I mentioned to the various programs that exist today. We are not trying to create a generic, come here for working capital, because what you reference is basically an SBA loan or a working capital loan that 200 banks can do today, which is not something we are even trying to focus on. So we're trying to focus on the green loans, and we're trying to connect it to the various incentives that other institutions and programs can offer today.
Thank you. I think Adam has a question. Adam?
Yeah, I do. Thank you for the presentation. My initial question is, I saw like the ISO logo amongst others in there. You mentioned a lot about data points.
Yeah.
I'm assuming this is around the greenhouse gas inventory and this kind of. Can you just elaborate how much of that data that you are referring to is actually primary data and not just like industry indices or secondary data sources when you're talking about your ESG rankings and the supply chain in particular?
So it's going to be a combination. So based on our approach, we're going to start off with an industry estimation using that level 0 baseline assessment. But as I mentioned, that's the reason why we created this 3-stage process. You need to get to that 3 stages before you can actually qualify for financing. Stage 1 is industry-based assessments. Stage 2 is basically primary data from the business themselves. And stage 3 is third-party data using risk scores and credit scores from other sources, plus their own financial metrics to qualify for that. So to actually get to the loan, it should be primary data only, but we take them to the process to smoothen that transition as quickly as possible.
Okay, understood. And I suppose the second part on the end of that then is how do you want to do the change management then with SMEs? Because frankly speaking, I see a lot of multinationals struggling even themselves to come up with a baseline and inventory. And if resonates with me, I don't know the UK anymore, but 95% of the UK are SMEs, right? So how do you want to support them where this jargon might be completely new for them?
And that's something we will have to build. I have it in my mind to kind of build out almost like a training program. We will have to do a lot of that. This is not an easy space to know. And I think the way we are at least approaching that is to focus on the specific types of initiatives, right? Because I don't want to think about sustainability in the broadest sense. I want to think about, are you doing green building transition? And we can kind of create a program just on that. Are you doing, biochar assessment? So we're creating a program just on that. So we want to tie it to the various initiatives and then see the right businesses that can meet those initiative programs. And from the monitoring perspective, you're right? The platform will allow you to provide updates, data, and all that. This is where the fees and the covenants of the loan play a role. If the loan tells you that, okay, you need to provide quarterly reporting or annual reporting and you need to provide this data, now they're forced to do it. Otherwise, they're going to get fined on that. I know in Europe, it's a little bit ahead. I know some banks that are doing this in Europe already. US is a little behind on this. So this is not going to happen in the US today. But those are the kinds of things that I think we can drive engagement and incentive. And part of the reason why we are trying to create a platform is because we need them to be engaged for these things to be material. Otherwise, because right now it's, I mean, from what I've seen, most of it is a data collection exercise. It's a transactional loan, and then you're done, and then you can't really monitor progress over time. So this is the reason why we started with a platform-based approach, where we want them to get engaged on the platform. We want them to provide additional, kind of updates and data points as the business progresses over time. And that's part of the reason why we are taking a more platform-centric approach rather than a data-centric approach.
So, can I jump in here?
Please go ahead.
Okay, great. First of all, that's a great idea, that which is promoting solution, which is one of the bottleneck of the industry, I would say, as I would agree with Adam. Also, I mean, considering the emerging markets, FIs also, even today, that the monitoring part is really, really cumbersome. They really would like to, the investors really would like to ensure the allocation of their funds in the right use. Even they are signing in that way. So this would not be my initial question, but I just would like to add as a follow-up question to Adam's one. So basically that you will be promising for a monitoring system to the lenders, to the creditors, in that way that you have to follow up or trace those KPIs or the progress of the SMEs, of the creditors, the borrowers, excuse me. So how would you do that? So basically, that would I assume your software will be talking to the existing software that they would be using, like EPR systems?
Exactly. Yeah, if they have ERP systems.
Work on that?
Yeah. No, that's exactly right. So today we don't have that deep level integration yet. That's something we will eventually build over time. So we will work with QuickBooks and other ERP system to track various progresses. But another thing to note, the kind of data we're looking at doesn't exist in any systems today, right? So, financial metrics are one thing that, that's easy to get with various plugins and infrastructure. But the kind of data we are looking at is, what is your carbon estimation? I mean, I don't see any standard system exist today for that, right? So those are the kinds of things, we will kind of have a couple of partners we want to partner with. We already have identified a few that they can do the carbon accounting for and get into the deep dive, scope 1, scope 2, scope 3, and then we aggregate that data. Eventually, as those become more standardized, then we can integrate into them. But in the short term, it has to be a kind of fairly manual data collection exercise from those, because we are not, like I said, we are not looking to do the, the financial assessment and the credit assessment. There's companies, I mean, Fitch can do that today, DNB can do that today. There's 200 companies that can do that today, right? I'm really interested in that one slice of data set, which is around sustainability and which are required as part of the what we call requirements of the loan, right? If the loan says you need to reduce your emissions by 30%, we need to figure out how we can collect that data over the next 5 years. That tells you you're actually making progress on that 30% milestone.
Okay.
Ashish?
Hi Hemant. First of all, really thanks, and interesting idea. So and this is intended to be a roast, so pardon me if I'm slightly critical. So that is the intention, I guess, of this.
That's
so
what you want, yeah.
So from a perspective of a financial institution, to be honest, I am not able to place how to position you. So if you get me, for example, I mean, I heard a lot of things. First, I think you're talking that you're a tech platform. So which means you bring like your core competency is a tech stack with the AI, etc. So that is one element you talked about. The other element you talked about is about lending, because lending itself, I mean, green lending is a form of lending. Finally, there is element of lending like the financial check, the follow-up, the repayments, the credit risk. That is the most fundamental risk before you lend. The green, if I would say, is a secondary part in green lending. The third, you talked about the whole, your expertise around sustainability, the KPIs, the performance tracking. So if you get, so I mean, so for example, now there are a lot of players who are purely ESG databases for SMEs, who have databases of say thousands of SMEs, and they offer you that from a supply chain perspective, etc. There are purely lending marketplaces where you have trade finance assets, B2B portals and marketplaces who offer you the visibility and, if I may say, the kind of buyer and seller matching. So that matching a financial institution with so there are those kinds of players, and then there are purely sustainability service companies who will do the third party verification, if I may use the word. So I'm exactly, so you seem to be talking a bit of all these three. So I'm not able to position you. And the second thing which I realized because of this is how do you plan to scale up? Because I mean, on one hand, if you're relying on tech stack, then you're relying on volumes to scale up. Whereas if you're talking of monitoring the third party verification, etc., then I mean, whatever you say about ERP integration, there is going to be some element of engagement with the counterparty. So how do you balance these two? And so I hope you got my criticism come question.
Yeah, no, I get that. I get that. And you're right? There is a lot of touch points here from our perspective. The way simplistically, the way I look at it is we are trying to be the glue to a part of this ecosystem, right? We are not trying to be an expert in any one domain, but we're trying to be a glue across the ecosystem. Fundamentally, the last touch point is where the value is driven is we want to be able to, as part of the bank's underwriting decision, be able to use the data from our platform for the bank to make their underwriting decision. That's the final touch point for us, right? And so that's the final data set that's going to be required for that. And everything behind that is how to get that data into the bank's hands. So first step is getting the customer acquisition, which is, part of a marketing play, which we have expertise in, and we can get in a lot of companies into the door. A platform to allow them to actually go through the qualification process, whether it's our own qualification process or the bank's provided requirements. Step 3 is the kind of getting access to 5, 10, 15 banks, and step 4 is sharing that data with the bank. So that's kind of how I look at it. That's the life cycle journey that we have to take the customer through. But at the end of the day, really what the value driven is the banks are going to use our data to make a decision. That's a fundamental decision we are looking at. And everything else is supporting that, whether it's data, technology partners, ecosystem integrations, all of that stuff is supporting that. So we are fundamentally a marketplace. That is the product. But the marketplace is helping the banks make the decision for the underwriting. That's kind of the way I look at it.
I think Steve has raised his hand. Steve, yeah, please go ahead and introduce yourself as well.
Okay, this is fascinating. Thanks, everyone. And apologies, I had some tech issues earlier. So Stephen Wazota here. Yep. So I lead sustainable finance and ESG advisory for Scotiabank. It's Canada's third largest bank. And so I cover all our commercial clients across Canada. So happy to be here, and thanks Hemant and team for sharing these ideas. My question is a bit two-part question. First is slightly a bit more simplistic. Is how do you get paid? Who pays you?
Yeah. Good. Yeah. So go ahead. You want to answer the question, or should I answer that?
Okay, yeah. So yeah, maybe go ahead, and then maybe you might answer my part B question, which is around, I don't know, depending on jurisdictions you're targeting, banks are heavily regulated. Data integration with banks, can be tricky, but you probably are aware of that already. But I think the other part to the question is, where are you seeing duplication? Like most SMBs have a banking relationship today.
Yeah.
So it's, how do you insert yourself again? But kind of back to that first question: who pays you? Who do you create the most value for, and how are you extracting sort of profit from that node of the value chain? So curious on your thoughts on that.
Correct. So good. Thanks for that. And so, so because this is the marketplace construct, our expectation, we have to test this. I by no means know the answer to this, but my expectation is that we essentially are going to be able to charge both sides of this. So for the organization, for the SMB, there's going to be a small fee as a platform fee to be part of that platform for 3, 5, 10 years, depending on how much time they need to use the platform for monitoring, so to speak, right? So there's a platform fee for that. And then with the banks, ideally we would want to be part of the transaction, right? Where if it's a $10 million loan, then some basis points that are associated with the loan becomes part of the transaction fee. The challenge with what you said is exactly right. It's a regulated industry, and we are technically not a broker today. We might become a broker in the future, but that's part of what we have to figure out with the bank, how we can be part of that transaction. So now whether it goes in as a lead gen fee or a referral fee or some kind of other broker-based fee that we can work with the third-party broker dealer, we can figure that out transactionally. But business model wise, that's how we're looking at it: transaction fee with the bank and platform fee for the organization.
Okay.
Jose, yeah, please go ahead.
Okay, great. So, as a follow-up question that I would like to understand first, what will be the commercial model? So, thanks to Stephen. And then as a follow-up question that, because you were saying that there might be some areas that to develop. If I would be a lender, I really would like to make sure that my eligibility criteria will be a right match with this
Exactly.
SME portfolio.
Exactly.
So
Yep.
what are the contractual requirements or the liabilities of this platform? Would you carry any liability of this match, and afterwards the monitoring period?
Yeah.
How we are planning to structure that?
Yeah, so I mean, right now, no, right? Because we're still too small for any kind of liability. So whatever we are doing today is more a data gathering and data sharing exercise, right? So we are trying to simplify the process on behalf of the bank for doing this information collection. We'll obviously configure the information from them, and we'll obviously have traceability in where that data comes from, who's providing it, whether it's third party or self-provided data, all of that stuff. At the end of the day, the banks are still responsible for the risk of that data. Once, if we ever become a broker dealer, then yes, then we would have to take that liability on and do that. But right now, we are essentially becoming the essential lead, almost like a lead engine for the bank. We'll pre-qualify them, get all the right information points, find the right bank and institution that makes sense for this organization, and give a packet of data to them, and then they'll have to take it on from there, right? So this process is very difficult for many of the smaller banks to do today, and we can start off that process as a lead generation tool. But eventually, as we integrate more and more into the bank, then we will have to take on some of that liability.
Okay, so can we say that it will be depending on the role that you will be taking, like as a brokerage, or only will stay as a platform?
Okay. Exactly.
And I have another question, and then I'm stopping. That what are the areas that I really would like to understand that you see today as requires some growth or like improvement, I would say. So what areas that you see yourself to grow, to improve?
So you mean where we are looking for this platform to go long term, or which industries are we targeting?
The weaknesses that I would say that today, that the weaknesses of the platform, and then how you would be improving on the way, even for the 3 months that before going live.
So we're already in the middle of kind of piloting some of these assessment models and identifying a bunch of organizations for a bunch of customers. We've lined up about 6-7 banks we're actually currently talking to and finalizing right now as pilots. So what we are looking to do is essentially test this qualification criteria and matchmaking, as I call it, with the banks before the platform goes live, right? The reason, and we can do that in a very manual fashion today, but when the platform goes live, it's much more of a self-service tool that any organization can come in and sign up and get that kind of process going. So we're actually doing these right now. As I mentioned, we're doing 2 pretty large pilots with about $15 million in financing, and now that we've aligned with about 4 or 5 new banks, we're going to actually try to target a new set of customers for those banks and test it in the next 3 months.
Just want to jump in. I have a few questions, but I'll just try to keep it short. So the first thing is that, how would you fare with the risk of greenwashing? So, like with the SME, and you have a lot of green loans, and I think that you already think of this one when you start the platform. But, in the case of even if you have the risk that the bank had to bear, and the and the borrower would have to bear the risk as well. But in the case, and if it is not monitored carefully, and you may have more than just like a few hundreds of greenwashing cases, that would be a problem as well, and it could be a risk. So I would like to see how you would react with that. And the second thing is that basically frameworks are not only ESG but also green, and for example, even the climate bond initiatives also change framework regularly,
really quickly.
And because of that. Yeah, and I can see that you have a good scoring systems, but whenever you change that, whenever the requirements of the for example GRI or SASB change, it could impact your score as well. So and when it changed like that, it would also change the historical score. And I would hope to see that, bank would hope to see the score change over time. And, it could have some impact on those, the company profile as well. So,
Correct,
how would
correct,
you
correct,
think
correct.
about that? Just one, you don't have, may not have to answer this one, but,
Sure,
I
sure,
do
sure.
think that, banks seems to have a lot of power, at least for emerging market like us. I can see that they have a lot of power, and, you have a good ideas, and they already have a portfolio of clients, and, if they
Yeah,
just try to replicate your idea and ask their clients to do so, it could be a
yeah, yeah, yeah.
threat for yourself as well. So, yeah, just a
Yeah,
comment.
agreed, agreed. Yeah, no, I'm with you. And like I said, this on the third piece, right? I personally think this market is very, very large, right? There's a reason why there's so many banking providers and finance providers and payment providers, right? There's a reason for that, right? It's a very large market, so I don't necessarily need to kind of try to capture the entire, kind of world, so to speak. I just need to capture certain pockets of the, markets that make sense. It could be even certain industries. So there's, I think we can be a very long successful business with just a small segment of the industry, right? I think in this kind of market, that's at least what I think, right? On the first thing, on talk about the regulations part, right? I agree with you on the regulations, and it actually makes more sense for us to be part of that ecosystem, because we can now be monitoring that, and we are monitoring what the changes are, what the expectations are, how do you modify the regulations, how do you meet the requirements, rather than the banks trying to do it themselves. Many of the institutions, these are smaller banks, don't have the capacity to do this, don't have the knowledge to do this, right? So it actually makes more sense for us to be a central party, to be able to take on that role and be the thought leader for the bank on behalf of the regulation changes, and kind of work with the bank, said, okay, GRI changed, ISSB is new, all of that stuff that's happening. How do you incorporate that into your programs going forward, right? So I think this is going to be a challenge outside of the big banks. I don't think most banks are going to have expertise in house, at least a significant capacity to do that. And the third piece on the ratings thing, right? So I came from the ratings background. So my background is in D&B. I actually built a bunch of supply ratings, and I know exactly what it means in terms of how data changes and risk changes and things like that. It is very difficult. It's very complicated. The challenge with sustainability ratings today is most of them are operating on a lot of, some primary data, some inferred data, and some, model data, I would say, right? Because everybody's trying to kind of connect all these three things together to kind of create a ratings profile. And the reason why many ESG ratings today are not correlated significantly well. I can look at Bloomberg's and MSCI's ratings, and they don't basically correlate at all for ESG. So it is a problem in the industry today. Now, as data becomes standardized and as data becomes a little bit more common across different industries and guidance, I know there's industry frameworks that are trying to do that. I'm waiting for that, to be honest, when that happens. So the reason why I didn't call it a score and I call it a scorecard is because score is absolute, scorecard is relative. That's a real reason I try. It's a small nuance, a small semantic, but score means it's a 1 to 10, good, bad. You know where you stand in a 1 to 10 score. Scorecard means it's based on the matching profile of the bank. So once you match with the bank, that scorecard is not relevant anymore. You have to do a new scorecard for the next match you want to do, and that could be adapted based on whenever the regulations change or the bank's requirements change. So that's a nuance that not many people know, and I purposely did that to kind of meet that kind of changing requirement on the score.
Okay, we have questions from Adam. Adam, please go ahead.
Yeah, thanks. Just to follow up, and maybe to Ashish's point about what are you in terms of an organization, or where do you want to position yourself in the market? And you sort of alluded to in your prior answer that, look, this side of the pond, meaning Europe, is maybe slightly more mature than where we are in the Americas right now. I'm not 100% there in terms of the regulations, yes, but just to sort of give you my 10 cents how I see it in terms of the competitive landscape, I see a lot of organizations, especially coming from Cybos a couple of weeks ago, who are already building their own, let's call it, white label solution to talk about some of the regulations that are imminently coming around the corner, right? Because the SMEs, frankly, a lot of them are going to struggle with just getting to grips with what does the regulation mean, and hence how could they do regulation. So when you talk about sort of the lead generation, and if I stuck myself in the shoes of a bank, and I heard you on your commercial model about the subscription fee and then like a transaction fee. If I'm honest, if I'm looking at my financed emissions myself as a bank, I would want the business outcome. I won't want to give you the cash up front. I want when the KPIs are met in terms of decarbonization, then you get a fee. We'll call it risk reward, but that would be the sort of. And on this side of the pond, I can already tell you, so apologies, I can't tell you the logos, but there's a lot of activity in terms of doing all these different pieces that you're already talking about. So where do you see yourself in terms of the competitive landscape? You basically spoke about the smaller banks, but even with the smaller banks in Europe, they're clubbing together to create their own hubs, let's call it that, or working with other things.
Yeah.
I'm not suggesting you're laser pie, definitely not, certainly not in the North Americas. How do you want to carve out that slice of the pie that you're referring to? Because for me, you've got to be very unique in terms of which part of the pie you want to go for here. Because at the moment, it's very broad in how you position it.
Sure. Yeah, I mean, I think I was kind of piggybacking off Ashish's comment I mentioned that my long-term goal is to be part of the underwriting process. So that's kind of where we are trying to target our objective, right? And all of these are the kind of the means to that end, so to speak. Now, I agree with you on the European side. There's a lot more competition. I mean, at least from the banking perspective, I think I've seen that they are much more forward-leaning in terms of the governance and the kind of the pay for performance type of thing. US is not there yet. I mean, most banks you're talking to are still just getting started on, even thinking about a green bond and a green program, right? I mean, outside the big guys are already doing it. I'm not questioning them. They say tier 2 banks and tier 3 banks, they're just getting started on that. Right. So I think we can have a significant market opportunity with that. And one of the things I was talking to some of the banks in the US was, we could essentially start to be that gold standard for some of these community banks to kind of leverage as part of their, green assessment when they kind of issue a loan. Right. So that's one angle to play. The second one, like on the question you mentioned, so there's significant competition in Europe. I agree with that, but I also think, I still think the market for this is very, very large and it's still not well defined. Right? I'm talking to companies in Africa. I'm talking to companies in India. It is a massive market. So I'm less concerned on one competitive threat, which is Europe, and I can target a lot of other competitive regions that we could target today.
Okay, fair response. My only bit of coaching, because I don't know if I'll get any airtime after this, is really just be tactical on the starting point. So I'm happy with the land and expand as you decided, but I think really which sector do you want to target first to go after this?
Yeah, perfect. And I haven't talked about that, but really the sectors we're currently looking at is real estate and logistics. So, most of the conversations we're having are in those two sectors. And in real estate, there's a couple of governments sponsored initiatives that we are essentially piggybacking off of our programs on. So, the banks are trying to get these government initiatives into the hands of their, businesses and customers. And we are trying to bring them the kind of right leads that can essentially qualify for those programs. That's our starting point. It's a very tactical step. I agree with you. I've talked about big ideas, but we are executing on a very tactical level right now.
There's a question from Steve. Steve, please unmute yourself.
No, this is great. Just coming back to the starting point conversation, and I sort of echo Adam's thought process around you really need to be very defined in terms of the actual problem you're trying to solve. Yeah. You want to solve a tiny problem in a big market or vice versa. That can make or break. But coming back to your point about the end goal of wanting to be in the underwriting phase, I almost think you almost need regulation to make sustainability a part of the lend, no lend decision. Voluntarily, I can share my thoughts around. Banks are not at that point yet. Maybe some of the European banks,
some of the
for certain sectors like oil and gas, power, and all of that. But if you're targeting real estate, the banks are very far away from using green or sustainability as a lend, no lend decision maker. So that's something to bear in mind. And regulation is quite far. Regulation is far away from that. Maybe in oil and gas or those sort of on the radar type of industries, that becomes a thing. So that should drive your strategy. And the other thing I would sort of plant as a thought for you is there's value to providing a scorecard to the banks. But when we, as a bank, when we think about these types of solutions, the value is not in giving us data that makes us think about interpretation.
Okay.
Your data,
Okay.
while I know what you mean in terms of you're trying to walk away from that absolutist type conversation,
Yeah.
which opens you to a bit of a liability risk, as
Correct.
Anne mentioned.
Correct.
But the thing you don't want with a bank is the bank wants to know this scorecard. What does it mean in terms of,
Correct.
does it mean I can give this client a better rate in terms of their lending? Does it help me think about, in the case of real estate, for instance, is this a better long-term asset for me to hold on my book? Tying that back to Adam's point around financed emission, if this is an asset that's lowering my scope 3 down the road, then do I think about it differently from a risk perspective? So you really need to be crisp in terms of what you're asking for the banks. If you make them think about what your data means, it's less valuable.
It's relevant. Okay. That's good feedback. I mean, I'll think about that. I mean, it is meant to be a scorecard rather for the bank so that they can make a better decision. So it's absolute for the bank, but relative for the organization, right? That's the way I look at it. So the bank will know what they need based on the scorecard, but it's actually for what the bank is looking for. But it's not necessarily the same for the organization because it could be different for different banks. So that's kind of the way I've kind of designed it, but I'll think about that a little bit more and see how that kind of plays into some of the conversations I'm talking to with the banks. That's good feedback.
Fantastic. Ashish, please go ahead.
I think I'll just make a very short point. I don't want to spend too much time. We saw, I think, even from my base, I'm still honestly not convinced on your positioning clearly from a financial institution perspective. But I'm just wondering, while we are speaking, why are you so fussed about only financial institutions? Because actually what you're offering might be useful, say, to a big multinational company, because responsible supply chain is a big part of every, I'm sure Adam from IBM may echo that, what kind of suppliers you on board. So this might be much more simpler to target. So I'm just wondering why only financial, because that is a much more complex thing for a financial institution, and that could be a much simpler thing. So
So this kind of goes back, actually, when I first started Zero Circle, that was my intention. That was my original plan when I first started the company. The challenge is we are too late, we are too early for small businesses to do sustainability reporting, and we are too late to compete with large players that are targeting our enterprises today. There's a lot of big companies that are doing sustainability reporting for supply chains, and we will have to raise significant amount of capital to compete with, the Personifi or the Watersheds of the world to be able to go into that space today. Right? We're coming in the game a little late for that. So that was the reason why we needed, and my intention was always to tie it to incentives, and there's no better incentives than financial incentives to drive engagement. So that was the reason why we shifted gear and said, okay, let's skim down the reporting side of the platform for supply chains and bring it down to kind of what the banks require and make it a lot more focused on that. The platform is very similar from what we originally launched. It was just a matter of repurposing it for financial assessment rather than supply chain assessment. Right. So that's the reason. I mean, we started, like I said, for about 9 months for the first part of this is 2021. We were going through, we had a number of pilots. I actually lost it to some of the competitors. I'm like, you know what, this is not, if I'm not going to raise $1 billion, I'm not going to compete with these guys.
So
please go ahead.
Am I? Maybe I can ask two questions again. That what would be the channels that you will be reaching out to the potential lenders, the tier 2, the customers that will be eventually. And the second one is that regarding your positioning in the market, that is there any if I would be a lender, that I would be asking that what would you guys proposing, serving us in a different perspective from the competitors or the existing market players?
Correct. So right now we're looking at mostly lenders in the US. We're talking to a couple of them outside the US right now to see, if there's kind of quicker go-to-market from different markets as well. So we're talking to some of the portfolio companies in EthAum who is working in Turkey that we can essentially partner with. We have a opportunity in Africa. We're talking to some banks in India. So we'll see where those conversations go. But our focus right now is in the US, right? And we have over 80 banks we've targeted, and we're talking to about 10 of them right now in various stages of conversations. So that's the we can get like I said, a big list of all banks in the US and start outreaching to all of them. So that's at least our starting go to market in terms of how we are trying to get connected with them. What we would, I think the second question is what we would provide to the bank. Is that the second question?
And it's just like as an incentive, I would say, or like tricking them that to pick you really to reach the right sources, right funds, user funds.
Correct. I mean, we are, like I said, we're flexible on that. We haven't, we have a high level business model in terms of what we're looking at, but within that, there's a lot of flexibility in terms of how we can drive their incentives accordingly. So it could be partnership engagements, referrals, it could be, kind of service fees. So there's a lot of ways we can structure that incentive structure with the bank and the fund and also the organization accordingly.
Okay. Any last comment or guidance or piece of advice for Hemant?
Yeah, guidance, please. I've already got a couple of good ideas that I should think about, so that's good.
I think that already mentioned, but maybe just one point that's regarding the dynamic of the change, the regulatory frameworks, and this business certainly will exist, and that this is a great need in the sector. That's a fact. However, just maybe you can just elaborate on the evolving of this regulatory framework and the world changing every day. I would say every day new regulation, every day that there are some requirements to be aligned from different industries and sectors. How do you think to comply those, and how do you think agile and flexible to adapt this changing world?
Yeah. That's helpful, and I know. I mean, some of it is obviously being on top of regulations is one of the things funny enough, I enjoy doing. So I actually look at it constantly in terms of where things are changing and evolving. And secondly, kind of my background in data and analytics is kind of helps a lot in terms of how to structure the platform to meet some of the evolving, kind of changes. So some of the ways that we've designed the platform, is conceptually, okay, if something changes tomorrow, how can we adapt to that very, very quickly? So we were kind of, try to make some of those decisions early on so that we don't have to deal with it, once then the regulation changes. So it's a combination of, keeping on top of it, adaptability, and then kind of some of it up, to be honest, that some of it is just my background, right? I've been in this space for a long time. When I was in my past company, we had 500 million entities that we managed, and it was constantly changing, and we had to deal with it every single day. So it's not an easy skill to master.
Perfect.
Yeah, please.
Yeah, I've probably just got a final comment, if I may. I think there's safety in numbers. You also mentioned that unfortunately you were too late for the enterprise market, and that's why you're going after institutions. But knowing other fintechs that I work with, at least in Europe and APAC, it's great to have your reference case. You're always going to need that in terms of quick win. But to be honest, the approach of getting the scale that you're going to need is to get basically a club or a consortium of banks to basically all buy into your concepts, because it's all well good to do one-to-one, but that's not going to get where you're going to need to get to, because there's a lot of great wealth in what you presented today, but I'm sure there's others listening into this with that aha moment and thinking, we could also copycat, right? And so hence those relationships, and as you just mentioned about the carbon accounting, who would be your partner for potentially in the US or beyond.
Exactly.
I'm
with you on that.
To get that exclusivity, because the market will be very, very competitive once obviously a certain regulation comes out.
Yeah, I'm with you on that. I totally see that happening. But I'm also trying to move quickly here, right? So that's part of the reason where we want to set the gold standard, hopefully, at least for, let's say, for the tier 2 banks. If we can become the gold standard for tier 2 banks, then I think we start to play a big role with it, right? But yes, we have to move quickly. I'm with you on that.
Awesome.
Yeah, maybe just from my side, I think, I would rather, if I think identify a niche in terms of positioning of I think Stephen said, what problem are you trying to solve? Which region, which sector? Because I think once you showcase some basic scale in one of these, a combination of, say, you can be identified as a real estate sustainability specialist in US. So then it's a
Correct.
niche, you show scale, and then it's easy to leverage. I think that is maybe a way to go. Yeah.
Correct. And we're exactly doing that, right? We're focused on that industry. We're looking at a couple of banks in the East Coast right now, and we'll double down there for the next 3-6 months until we achieve kind of scale within that domain, and then we start targeting the next one. So it's kind of the approach we're executing on. But we have obviously the ideas are much bigger than what we actually can do today. So
overall, it's for me this is impressive because we also see the financing gap for SME in the emerging market like ours. So I would love to see it, like something like Zero's circle to be in
awesome.
like country like us. But honestly, to be honest, like I don't know how you can you can do that in the US where things can be very more transparent and more
Sure.
easy to more developed compared to ASEAN. So, for example, like we have ASEAN taxonomy, where I'm kind of not even sure that everyone is following that, or everyone has their own taxonomy and
Got it.
everyone has their own framework, and everyone wants to set the rule. Even if in our country, like banks also set out their own rules that they would not agree with each other. So in terms of scaling up, and especially when you if in the coming years and you have a chance to move to other countries, that could be a huge challenge going ahead.
Yeah. Agreed. I'm with you. A number of frameworks I know a number of acronyms I know on the top of my head is pretty sad.
My last comment would be, that there's a lot of value in that real estate play. The way you're thinking about the ability to execute some of those, whether it's retrofit, energy efficiency, it's almost, there's a real economic case for sustainability in real estate versus many other industries where there's a good case for sustainability, but the economics don't necessarily match up. So there's value to that real estate play that you have. So, maybe keep unpacking that and seeing, as Ashish mentioned, find that nice niche there. But yeah, the economics there make a ton of sense.
Makes sense. Okay. No, that's good. That's good to know.
Again, really, really appreciate all the panelists' feedback, insights, guidance to Hemant. And thanks to Hemant for presenting, for taking all the feedback very positively. I see that he's not sweating or he's not shivering. So that's a good roast session. But yeah, again, really appreciate everybody's time today. And hopefully we can reconnect in the next few days, weeks, and see how we can collaborate, support each other. I think that would be fantastic. So thank you, everybody. Really appreciate it.
Thank you, everyone. Appreciate your time. Appreciate all the feedback. Really appreciate it. Thank you so much.
Thank you. Thanks, Simon.
Bye.